Good evening, everyone. Today is 27th of January 2026, 8:30 p.m. Malaysia time. And today we will talk about the upcoming month 2026 forecast, which we will officially go into the year of Peng Wu or the fire horse year already. Okay. So this month, the theme is month of separation. That means how we are going to separate from the old norms to a set of a new world already. Okay. So this that's why it's called a month of separation. And for those who are new, actually we are applying Chinese astrology and trend research to forecast the economy, financial, and geopolitical events to help you to make better investment decisions, because we know that um, the market um, is very much also depends on the sentiments of the economy, the fundamentals of the economy, financial, and geopolitical events. Although there could be some moments that the market behave like a casino, okay, but we cannot still run away from all these financial, economic, and geopolitical events. Okay, so the top agenda, as usual, we will do an introduction, which I already did, and disclaimer, and then a brief recap of last month's forecast to ensure that what we forecasted is on track. Okay. We don't just simply talk. We go back and check the event. Okay. What happened. And from there also it gives us data points to learn. Okay. So and then we shall look at the influence of the five elements energy, the astrology part in it should be in February 2026. My apologies. So, and then PC will talk about February 2026 geopolitical and financial forecast and a summary by me. Okay, so let me just correct this one. Okay, hold on for a while. Okay. So we'll go through the disclaimer here. Okay, the content that we are presenting here is purely based on our global trend research related to five elements, and also the research from the media, okay, from KOLs, from mainstream, and also from other medias that BC use, those reliable KOLs for you to use as a guideline in your investment decision. We once again would like to access would like to put in that please exercise caution for everyone here that call in tonight um in investment especially in such volatile situation. Do your own research on the company that you want to invest. Okay, in this talk we will not give any stock advice. For members, we will, share some studies of the potential companies that we look at, okay, in our private telegram group, or members can also reach out for us through email and address. I will talk about how to join us as a astrology and global trends member. Okay, we analyze different regional economies such as US, Europe, and China. Please note that there will be inherent differences from the regional perspectives, as the observations are based on our study and current economic trends. It does not reflect any absolute or definitive judgments about any specific regions. Okay. Yeah. So I think most of y'all know, both of us, we have written quite a number of books ever since we started this platform in June 2022. Okay. So yeah, we are going to have our 5th year anniversary, maybe next year, maybe. Okay. So yeah. So we both of us have collaborated in several books, the annual book podcast, and also this book called Unlock Your Wealth Potential. And most of the items that we have forecasted in this book I think has already materialized. Okay, some materialized even faster than we anticipated the trends of the fire period. Okay, so far I think we have achieved. We can proudly say that we have achieved about high accuracy, about 80%, to help our members in making a profitable investment decision. Okay, so this is the annual forecast book that we have written ever since from 2023 till now 2026. And of course, every year, end of the every I think the members can also check that everything that we have written, I think so far has already materialized every year. Okay, without fail. At least 80% of it. There's no such thing as 100%. Let's do a recap first on what I have forecasted in January 2026, that we talk about weather, we talk about, wood energy is weak, government, social pressure, consumer, and then small businesses also face funding stress. I think a lot of bankruptcies going on. I saw that BC also puts in that, and then there are some false stimulus being backfire. Tech and speculative assets are underperforming. I think in January we do see that you can see a lot of tech stock are not moving now. Okay, yeah. So without wrongdoing, so this is the headlines of the extreme climate conditions, especially the cold and the floods, and also the bitter winter. Okay, so this has materialized political and leadership dynamics. We have also seen some dialogues um between China and Britain, and also Mike Kenny. uh, You know who is Mike Kenny, right? Um, Canadian's PM. Actually, he was a financial guy. Yeah, he was a financial guy. I think he used to go to Britain and work for the British, I think, bank or something.
Central Bank,
Central Bank,
British,
yeah.
yeah,
Yeah,
BO,
before he goes back to Canada again.
Bank
But
of England.
yeah, Bank of England. Yeah, okay. So Mike Kenny, actually Mike Kenny, I think a lot of people in Canada likes him. Yeah, okay. So he also visited China because he's very near the US. So I can see the reason why he visited China, but unfortunately that visit also received a lot of criticism from the citizen of Canada. They are split into two camps now. Okay. Yeah. And then we also see Greenland, sort of gaining some traction here from Mr. Trump himself after the Venezuela. Okay, I think he's eyeing on Greenland now. Yeah. And then in economic and industrial trends, we can see that the economic growth has slowed. I think PC has also sort of forecast that. And then bankruptcy filings has surged. Okay. And also I think Trump, he has, the QA mortgage stimulus plan that backfire. So it could worsen the housing affordability, and the retailers also has dropped spending. Okay, and I think besides that, because of the extreme weathers, it also cripples the logistics, air, train, and road traffic. Okay, and then definitely cause a havoc or cause a disruption in the industrial trends. Okay, they are all interrelated. You have ripple effect of one another. So we have seen, precious metal go to another high. Okay, and people are migrating towards a more safe haven traditional type of investment like gold, precious metal. Okay, yeah. And also, actually, another one is defense stocks, but we never talk about defense stocks. I actually we want to keep our principle here that, yeah, you can sort of, there is a potential in the defense stocks, but we never talk about that. I used to work for a company that is also in defense before. Okay, so definitely all these, are very strong holding from the U.S. government. Okay, so yeah, so this is all we do not touch that because we have many other things to talk about already. Okay. Yeah. So let's go through the month February 2026 energy. Okay, this month itself actually is a Li Chun, and this is a Li Chun chart. I will go through a more detailed Li Chun chart studies in the annual upcoming Global Trends and Astrology talk on February 7th. I will announce that after this call. Okay. I will give you all the link for registration for the members. It's free for the members. Okay. So in
2026 is not a normal year. It's the Bingwu Firehorse year, a year of rapid change, market shocks, and sudden opportunities. Those who prepare early gain the edge. Those who don't react too late. In our book, 2026 Firehorse Year, Astrology and Global Trends Forecast, we combine Chinese astrology with global trend analysis to reveal where risks may rise and where smart capital could flow. We break down key economic shifts, sector opportunities, and investment challenges you need to know before 2026 arrives. To help you get ahead, we're offering a free chapter download for a limited time. Scan the QR code or click the link below. Prepare early. Position smart. 2026 waits for no one.
So in the February is already arrival of spring, as well as the official start of the Bingwu year. Bingwu year starts on February 4th and not the February 17th. February 17th, who knows what is February 17th? What day is February 17th? Anyone in the chat box can put in? Yeah, Chinese New Year. Thanks, Mitra. Thanks, Win. Yeah, I want to ensure that everyone is still awake. Yeah, thanks, Chinon. Yes, that's right. So the Peng Wei already starts to kick in the energy. Okay, so it's strong fire. That means there will be power projection, conflict, inflation, and geopolitical tension once again. And most of all, it will be a structural. It will be an overhaul that all system forced to evolve. Okay, so we can see that one of the biggest thing, even though you do not know what is period 9, you do not know, what is, what is Li Gua, what is Chinese astrology, but you do know that AI is transforming the way we live now, right? And also it could potentially, in fact, it's not only potential, it would, transform the job market. I wouldn't say that replace the job market, okay? It's a transformation, okay? So it's a transform that job market will evolve itself, okay? So most of us have to reskill accordingly. And then here also we can see that the east and the west, the metal wood conflict as well. So the chart itself here, I have already talked about it, I think during my book preview in Casey Lau's platform, that the chart itself very obvious. We can see that there's no water. That means it's very difficult to turn output into wealth in a very simple language. That means productivity, there is productivity, okay, but however it's not easy to turn into wealth or maybe cash. Okay, so we will expect very extreme weather. Either they are too cold, or they are too warm, okay, too hot. I will explain the reason why. Okay, in my upcoming astrology talk, that is a scientific explanation for all these things. Okay, and also rising of global conflicts, competitions in defense and tech sectors. Then there could be, of course, if you can see the fire, there will be fire-related disasters, drug concerns. Yeah, okay, and tech, defense, energy sectors will perform well. Okay, and then agriculture, green sectors, certain one will perform, certain will not. Okay, and then there will be still bullish sentiment in tech, finance, and also defense sectors of finance. We talk about more on fintech, not the traditional banking. Okay, yeah, and volatility, expected in the competing global agendas, And also there will be, competing global agendas and competing resource allocation. Okay, so we know that we are now you can see we are now in the resource war. As I think those that have attended our period 9 course I in 2024, right? The first one we already talk about that. Why is it a resource war? Now it has intensified. So I hope that those who has taken the period 9 course has taken action to know, what to do. Okay. Yeah. Let's go through the hexagram of the month for 2026. 2026, the hexagram, okay, the month pillar is Geng Yin. And the interesting part about Geng Yin, because we have 64 hexagrams, 60 jiazi. This hexagram, this jiazi has two technical side. This is a bit technical, but forget about it if you do not know Chinese metaphysics. Okay, so this Geng Yin, they actually have two hexagram one. Okay, they have transformation. One is hexagram number 30 is a Li Gua. Another one is 49 transformation is a Ge revolution. That means it will first of all separate from the old and then it will transform. If you really want to see big transformation, it will be this year in 2026, where it will really transform into the new world order. And I suspect even the currency, also will transform. BC. Okay, so if exposure will leads to re, reformations, leadership changes, okay, and then political realignment. Um, political realignment is more of a very diplomatic word to use. Okay, it will be it will be more of a change. Okay, and there will also be because at the same time because Li Gua means that everything is transparent is clear because of the fire so there will be also things unsustainable practices will be reviewed. Okay, demand for systemic transformation reform and volatility by sector. Okay, and then the reform the social movement gains momentum. Okay, and then we push for there will be people that push for transparency fall of dominant tech narratives for the past ever since from 2020 till now 2025 for the past 4 5 years we have already seen a lot of dominant tech narrative in fact we have magnificent seven magnificent seven is consists of what all the tech stocks, right? Okay, and also the rise of ethical innovations and the truth about climate risk sparks strong policy proposals and also potential global cooperation and protest. This is what we can see from the image of the hexagram 30 to reform in hexagram number 49. Okay, so yeah, so I think let's that's it from my section. Let me just remove this on for a while. Let me annotate. Let me just clear this, and then I think PC, you want to share your
Yeah.
deck, right? Okay, so you go ahead and share. Let me just unshare it. Okay.
Okay. So
Okay.
just
Let me just unshare. Stop sharing. Okay. Good. Yeah.
yeah.
Okay. Go
So
ahead,
yeah.
PC.
So just to recap, what happened in January. So in January we say that there will be some information on the Clarity Act, but it seems like the Senate Banking Committee has postponed the session, so we will not have any info as yet. Then in Europe, we mentioned that the European market could see yields moving higher However, the sharp rise in the Japanese government bonds forced the government to sell US treasuries to help slow down the rapid decline in the yen versus the US dollar. Now, this shifted the bond market's attention to what's happening in the JGB and UST markets. So the European bond market was spared from further turmoil. So what we forecast of an increase in yield did not happen, mainly because the market attention is shifted to the Japanese and US market. So month to date, 10-year bond yields of major economies in Europe, Germany rose 1.6 BPS, France 3.5 BPS, UK fell 1.4 BPS, and Spain fell 3.8 BPS. But overall, all the four saw their 10-year yields at very elevated levels, okay? When we compare to historical trend, you can see that all of them are hovering near the top, okay? Over here, Spain has come down a bit from its top here, but the rest here are near tops, but still remain high. Okay, that goes to show that there is a bond crisis even in the European major economies, except that it has not reached a critical level like what happened in Japan. Okay, Japan yield actually keep on rising, reaching new highs reaching new historical highs. Okay, whereas here they still remain high, but then less attention. Okay, but where we got right, okay, the US 10-year yield surged 11.4 BPS to 4.256%, okay, from 4.142 month to date as of 22 January. We said that the Fed cutting interest rate would actually spur the yields higher, not lower. And this is because people already are very antagonistic, okay, towards what is happening in the US. Because normally a rate cut would actually show that the borrowing rate should come down, but what happened is that the government's bond yields actually rise. That goes to show that investors are skeptical that inflation in the US could be controlled. So US Treasury bought a total of 4.8 billion in Treasury bonds month to date as of 22 January. So what happened is that when the US Treasury does is that they want to control the yield. Because when the US bond yields rise, the borrowing cost of the US government would also rise. And we know that the US can never stop spending. So what the US Treasury Department did, they bought back US bonds. And the funny thing is that they issue bonds to get the money to buy back bonds. Okay, so actually when they issue the bond, they are already incurring a borrowing cost. But what they intend to do is to offset a much higher borrowing cost. So, but eventually, okay, the thing is the borrowing keeps on increasing. Okay, and due to his sagging popularity, which could impact the Republicans during the midterms, Trump floated the idea of a $2,000 check for the middle class Americans. So this is what he intends to do. Okay, and in last month's forecast, we already showed the polls showing that the Democrats are actually taking a lead against the Republicans. So Trump will do whatever within his means to let everyone knows that the economy is okay. There'll be more things offered. Okay, it's like, telling everyone not, that US economy is strong and so forth. But I think we already debunked the fact in our January forecast on how the US uh, GDP growth um, is uh, is a charade, okay, you can call it, or it's just a mask, okay, whereas the fundamentals are actually collapsing. Okay, you can refer to our January video if you want to have a deeper information. So we mentioned that the resulting bond purchases by the US Treasury and Trump needing to boost the economy and its ratings will result in more funds flowing into the precious metals. And this is what happened. Month to date, 22nd January, gold has gained 10.9%, okay, uh, from 4,300 US dollars, while silver has gained 29.9% from 71 dollars and 54 cents, okay, to $92 per ounce. But right now it's more than 100. So actually both gold and silver um, has increased much higher in price. We also highlighted problems developing in the private equity market. And here is an article stating that private equity backers offload record amount of old fund stakes because they are also, normally private equity, when they invest, they want to see returns. Okay, but when they invest, they don't see the immediate returns, they would want to offload as well because they are in for making money. So in our January forecast, we shared a chart indicating that industrial and consumer discretionary bankruptcies consist of the largest sectors in bankruptcy filings. So although the US economy data does not reflect it, the pattern of consumption has affected very well-known brands at the end of Q4 2025. And here you can see the key retail bankruptcies, closures in late 2025, and other broader trends and other closures. Okay, so it goes to show that the US, which is almost 70% of its economy, is driven by consumption. And right now we see so many retail outlets being closed. So it runs contravene to the GDP data. So we forecast for Europe, we forecast that France will continue to experience political turmoil, and barely days after surviving a vote of no confidence on 14 January, the French government faces another daunting task. Okay, here they are facing another fight over the 2026 budget. And we also warn of higher in Europe is already happening in Germany. So even France and UK were not spared. Number of bankruptcies in French businesses could reach high in 2025. Okay, insolvency is becoming a material risk for UK insurers. So we also mentioned that unemployment rate will go up. Okay, so German unemployment rate was 6.3% in December 2025 versus 6.2% a year ago. France unemployment rate was 7.8% versus 7.4% a year ago. UK unemployment rate was 5.1% in November 2025 versus 4.4% a year ago. So we also warn of societal upheavals with racial riots in major cities in Europe. And here you can see many headlines of arson attack, thousands of protests, strikes and protests, asylum seekers, stage one in, one out protests at detention centers, farmers block Lidl's site with tractor barricade. So all these are happening because the world in the world of politics, there's a lot of turmoil right now, especially in Europe and in the US. So in China, as predicted, China retail sales and fixed investment collapsed in the month of December, but still achieved 5% GDP growth for the year due to strong balance of trade and industrial production. China just approved another consumption-driven stimulus for trade-in of electronics, digital products, and autos. Stimulus also includes encouraging the consumption of services. Now, we already mentioned this in our January forecast that if December or Q4 show weakness, China will actually come up with renewed stimulus. So China also launched stimulus for households to upgrade their homes. And we forecast that China will seek tech independence. It's just halted the import of NVIDIA chips. And as per our forecast, China is stockpiling key resources. Here are several reports, okay, that China adds to state gold reserves for 14 consecutive months. And China just played the silver card. Effective of January, they are not going to allow, or rather they are going to restrict the export of silver. But looking at how the Shanghai silver stock in the warehouse has depleted from thousands of kilograms to just a few hundred, okay, then it becomes a major problem. And that's why China right now is having a much higher price for silver because they want to suck in the silver from elsewhere to fill up its stock in the warehouse, because otherwise a lot of the industry or technology laden industries which require silver for EVs, for wind turbines, for solar, as well as for other high-tech electronics. Without that silver, okay, it will become, most of them would, can literally stop work, okay, because silver is an important uh, mineral in their industry. So we also mentioned that China will unleash its own AI and chips technology. Here you have Alibaba Q1 become the first open source AI model to surpass 200,000 derivatives. And here you have a Global Insight Journal. China has made breakthrough in semiconductor technology. And we mentioned that China tech sector will continue to do well. The HSI Tech Index is up 16 points or 0.28% month to date as of 22 January. So we also mentioned that countries will start issuing RMB denominated bonds. So Pakistan is one of those that first did this in January. So we also mentioned that China's 10-year bond will outperform the 10-year US Treasury. And as of 22 January, Chinese 10-year bond yield is 1.825% versus the US 4.412%. This normally the value of the bond is inverse to the yield. So if the yield is low, it means that the value of the bond is higher. Okay, and if the yield is high, that means that the value of the bond has dropped. So let's look at US economic indicators. Now, the first revision of Q3 GDP saw a growth of 4.4% versus 4.3% stated earlier. So as I mentioned, a lot of things are not in line, okay, with the current fundamentals. Okay, for example, inflation is being calculated based on almost 40% guesswork, whereas previously, guesswork is almost 0%. So a lot of things is being manipulated to lower the inflation so that the consumption, okay, less inflation shows much higher percentage, okay, and that contributes to the GDP. But we all know, okay, as I've shown in charts, that the freight in the US is collapsing. Import is also collapsing. So US doesn't manufacture a lot of consumer goods, okay, but we will dwell on that later on. Okay, when imports fall, that means the consumer goods actually are falling due to falling consumption. So CPI rose 0.3% month on month in December. Year on year, it rose 2.7%, unchanged from November. Core CPI rose 0.2% month on month in December. Year on year, it rose 2.6%, unchanged in November. PPI rose 0.2% month on month in December. Oh, this is correct, November. Because the data is delayed, yeah. Year on year, it rose 3%. Core PPI was unchanged month on month in November. Year on year, it rose 3%, which is delayed data. So retail sales rose 0.6% month on month in November. Year on year, it rose 3.3%. Okay, also delayed data. New home sales fell 0.1% month on month in October. Year on year, it rose 18.7%, which is also delayed. So you can see the impact of the government shutdown has actually created a lot of data sets that are delayed, okay? And this is also a way to mask the true story of what is happening in the economy, because when what investors are interested are actually the current data. But when you come up with the delayed data, people just skip it. People are not interested, okay? Because it is what the current data that is important that investors will focus on. So housing starts rose 5.4% year on year in October, while housing permits fell 0.5% year on year. Existing home sales rose 5.1% month on month in December. Year on year, it rose 1.4%. Pending home sales fell 9.3% month on month in December. Year on year, it fell 1.27%. Preliminary PMI for manufacturing came in at 51.9, while PMI for services at 52.5. So this indicates that the economy is still expanding. And let's look at the US trade data. The US Census Bureau and the US Bureau of Economic Analysis announced that the goods and services deficit was 29 billion in October, down 18.8 billion from 48.1 billion in September, revised. So you can see that why the trade deficit actually fell, because imports actually fell. Here it shows that import fell 3.2%, okay, whereas the deficit fell 39% and export grew 2.6%. But there is a very interesting story behind it. So export of goods on the census basis increased 7.2 billion overall. So industrial supplies and materials increased 10.2 billion. But what is interesting is that non-monetary gold increased 6.8%, which means US exported a lot of gold, okay, in that period. Other precious metals increased 3.6 billion. So these two together added up is already more than 10 billion, precisely 10.4 billion. Okay, other goods decreased 1.8 billion, consumer goods decreased 1 billion, pharmaceutical preparations decreased 0.9 billion. Higher export could be driven by export of mineral resource, in this example, gold. So here is just the increase here, but in January itself, total amount, not January, in the trade data, which is for the month of October, total gold exported is actually 17.1 billion, okay? So you can see that during this period, it skyrocketed. whereas during other periods, it is less so, okay? Then we look at the imports. So imports of goods on a census basis decreased 11.5 billion. Consumer goods decreased 14 billion. Okay, pharmaceutical preparations decreased 14.3 billion. Industrial supplies and materials decreased 2.7 billion. Now, why I look at these two, consumer goods and industrial supplies, this itself already decreased by 16.7 billion. Now, because in our January forecast, we show a chart stating that discretionary consumer and industrial were the major sectors that experienced bankruptcies. Okay, so that goes to show that how can it be that the consumer economy is so robust when consumer goods are also decreased, okay, and industrial supplies and materials also decrease. And here, non-monetary gold decreased 1.4 billion, capital goods increased 6.8 billion, computer accessories increased 3.7 billion, telecommunications equipment increased 1.9 billion, computers increased 1.1 billion. Okay, so that goes to show that there's a lot of information that doesn't align with that GDP reading. And if we look at the budget deficit, the US Census Bureau and the US Bureau of Economic, okay, this is a repeat, so I just delete this one. So the cumulative budget deficit from October to December 2025. Now, the US fiscal year is from October 2025 to September 2026. So already in the first 3 months, the budget deficit is 602 billion. But year on year, the budget deficit declined 15.27%. So that goes to show that the US spent in the first 3 months of the current fiscal year about 15.27% less than what happened in the previous fiscal year. But December data has shown a reversal from the 2-month downtrend from October to November. It may signal that the budget deficit is back on an upward trend should the figure in January see another increase year on year. So why December actually show a reversal of a 2-month downtrend? We all know that the US have an armada surrounding Venezuela. Okay, now running that kind of logistics is not cheap. To have so many military personnel, okay, in that place at the same time consume a lot of consume a huge amount of the budget. Okay, and not only that, continue to spend on, for example, funding a lot of the Department of Home Security. Okay, they are going to have another funding round of 10 billion again, and also because of the amount spent for interest. Right now, the US is paying almost $1.2 trillion a year in interest on its bonds. Okay, so here you can see that the major contributor Social Security, which takes the bulk of 400 billion. Net interest is 270 billion. If we look at it at 270 billion over the 3 months, so that means that over the whole year is easily reaching 1.2 trillion. okay? And defense 264 billion, but Trump mentioned that he will increase the defense budget from 1 trillion to 1.5 trillion. So additionally, you will have that 500 billion, okay? Health and Medicare, also both of them together is more than 500 billion. Now, the other thing is that Trump is proposing to buy Greenland and pay $100,000 per citizen in Greenland. That will incur 706 billion. And this 706 billion, the US doesn't have because every month, the US have to borrow additional from the market to spend. And if let's say you have now 500 billion in additional defense spending, and on top of the 700 billion for Greenland, then inevitably that itself is 1.2 trillion. But I doubt that the citizens of Denmark on the citizens of Greenland, to be precise, and the government of Denmark would accept that offer. So the other thing is that the Atlanta GDP right now is forecasting Q4 GDP to grow at 5.4%. So as I have mentioned earlier, Trump will ensure that the US economy rises under his watch, including smudging the economic data. The chart below does not reflect the true shape of the robust economy. So but we can readily accept that the Q4 GDP may beat analysts' estimate. But very interestingly, this is the chart of the CAS freight index. It goes to show the type of the logistic business in the US. Now, this is at the end of December, okay? If let's say December, the freight index have collapsed, okay, and in Q3, the freight index have collapsed, and in Q2, the freight index have collapsed, then you can know that the so-called robust economy is just fake, okay? Because if consumption, which is about 70%, 67 to be precise, 67% of the US economy. And if let's say the freight of goods have collapsed, then it only goes to show one thing. That consumption that has shown an increase is not actual quantity of goods consumed, but it's actually the price of goods consumed, which is more related to inflation. But if let's say inflation, is high, why does the US report a much lower inflation? And as I have mentioned, okay, it is all done by readjusting because more than, it's already 40%, almost 40% is based on guesswork. So it's just adjusting the figures to reflect a much lower inflation so that it boosts up the consumption. But here we can show that the freight index have already collapsed, and therefore the amount of goods shipped has basically fallen as well. So what we can expect in February, the budget deficit will likely be on the rise as Trump intends to hike defense spending by 1.5 trillion and reiterated his intention to send a 2,000 check to Americans that will cost several hundred billions more. And what we can see right now, the US is amassing another armada in the Middle East, which will continue to continue the cash burn. Okay, so the increased budget for defense will benefit the defense contractors, as Evelyn mentioned. The Fed may surprise the market by not cutting rates. We'll know tonight, okay? Because the Fed often says that If let's say the economy is strong, GDP is strong, there's really no need to cut interest rate. So Powell is mentioned that he'll be resigning soon. Okay, so perhaps I think his parting gift may be to still be staunch in his philosophy that inflation remains high, that he will think that cutting rates is unnecessary. But we never might know. Okay. Um, this is something that the Fed might do because some analysts have come out and say that there's really no need to cut interest rate because the economy is very robust. But some fractions within the Fed may overrule those that are hawkish because they are very pro-Trump and they might insist that interest rate, needs to be cut. If let's say they cut interest rate, then today is Tuesday, tomorrow night, okay, if they decide to cut interest rate on Wednesday night, then the precious metals would actually spike or surge higher. But then again, whatever the outcome, okay, if they don't cut, we could see a temporary rise in US yields, but then the Fed already have QT light, okay, and the Treasury will continue to their bond purchases to control the yield. So you can see that the direction that the US is undergoing right now is very similar to what the BOJ has been doing in Japan for the past 2 decades plus, that is trying to control the yield, okay, by having a lot of monetary policy, okay, that maintain the yield lower, but incurring much higher borrowing amount, okay? That is why the Japanese government's debt to GDP surged to more than 250%. So US dollar continues to fall as Trump puts spending above savings. The US dollar could fall hard if it starts a war with Iran. Gold and silver could offer safe refuge. Platinum rapid rise may surprise many. Two important news broke on 16th of January. US lawmakers introduced a bill to create 2.5 billion critical minerals stockpile. This will put a floor price of on these critical minerals. And producers of rare earth and other critical minerals like silver, lithium, tungsten, antimony will benefit. The Trump administration outlines plan to build big power plants again, and this will benefit the uranium producers and downstream service providers, which are in the enrichment, reactor builders, and component suppliers. So the stockpiling will create additional pressure on the supply side and push prices higher, okay? So US push to expand and the grid build out will create additional demand for copper, which is already facing supply constraints for many years. More room for copper to trend higher. So you can see that copper is facing a similar situation over the next 1.5 decade, similar to uranium. And that is why in my Facebook posting, I mentioned that there are 4 critical minerals. There are many, okay, based on the US list of critical minerals, but based on the kind of urgency that we see, okay, the 4 would be gold because just now I shared with you, US bonds yields are increasing, Japanese bond yields are increasing, Europe bond yields are also increasing. That means there's a lack of trust in government-backed asset, okay, which is the bond. Okay, there's less confidence in government-backed assets, and that is why gold will shine. Now, silver is because it follows gold in terms as a monetary asset, but it's also an industrial asset, which is now facing severe shortages. And the next two is uranium and copper because of the nuclear build out and expansion of grid. And data centers as well. So all this would consume energy, and copper is the major mineral that will connect all this infrastructure. So both uranium and copper are facing deficit in supply. So if we look at Europe indicators, Euro area CPI came in at 1.9% year-on-year in December, down from 2.1% in November. UK CPI came in at 3.4% year-on-year in December, up from 3.2% in November. In fact, there's a lot of weakness now showing in the UK economy. Euro area retail sales rose 2.3% year-on-year in November, up from 1.9% in October. So UK retail sales came in at 2.5% year-on-year in December, up from 1.8% in November. And German manufacturing PMI came in at 48.7 in January versus 47 in December, while services PMI came in at 53.3 versus 52.7 a month ago. France manufacturing PMI came in at 51 in January versus 50.7 in December, while services PMI came in at 47.9 versus 50.1 a month ago. UK manufacturing PMI came in at 51.6 in January versus 50.6 in December, while services PMI came in at 54.3 versus 51.4 a month ago. Now, generally, the PMI doesn't show that that much of weakness, okay, but these are actually surveys done. But what we can see is that in the UK, inflation is still elevated. In Euro area, it has come slightly down, okay? So Euro area may still, continue its slow growth momentum. So Q4 GDP for major economies of Europe will probably be in the very low single digit. Stagflation is very much in play in the major economies. So we will see that the growth is, hovering below or slightly above the 1%. So relationship between the US and Europe has worsened after Trump's Davos speech. Now, this has resulted in several major funds within Europe dumping US dollar denominated assets. We could see more funds choosing to exit the US market, but it will be done gradually so as not to cause panic selling. Likelihood, these funds will target US Treasury bonds first before moving into stocks. Therefore, we can see the US dollar weakening against the euro and British pound. 10-year euro bond and British gilt may outperform the 10-year US Treasury. Meanwhile, German politicians and economists are urgently requesting the repatriation of roughly 1,236 tons of gold valued at over 160 billion euro. This could spark further repatriation demand from other countries in the continent, pushing the price of gold higher. We all know that the US gold is questionable because since the 1950s, there has not been a proper audit. If you all could recall, when Trump was running for president, he was saying that we need to audit Fort Knox, and even Elon Musk put it on Twitter, yes, we must audit Fort Knox. But ever since then, this has quiet. This has become very quiet, okay? No one is talking about it anymore. So the EU could soften its stance against China as it seeks a reliable partner. We can expect some deals to go through. So if we look at the Chinese economic indicators, 2025 GDP grew 5% year-on-year to a new record high of 140 trillion renminbi. CPI rose 0.8% year-on-year in December, up from 0.7% in November. Core CPI rose 1.2% year-on-year in December, unchanged from November. PPI fell 1.9% year-on-year in December, up from negative 2.2% in November. Total resale sales climbed 3.7% year-on-year in 2025. It climbed 0.9% year-on-year in December, down from 1.3% in November. In fact, you can see that during the last 2 quarters, Q3 and Q4, the retail sales has been steadily declining. And it is mainly because people are winding down their purchases. Most of the purchases were done in the first half of the year with regard to the trade-in program for the electronics, digital products, and auto. So the Chinese government wants to emulate what they have done last year, and potentially they hope to inflate the retail sales back to much higher percentages of growth during the first half of this year. So industrial output expanded 5.9% year-on-year in 2025. It rose 5.2% year-on-year in December, up from 4.8% in November. Fixed asset investment fell 3.8% year-on-year in 2025, down from 2.6% year-on-year in the first 11 months. So unemployment rate was 5.2% in 2025. For December 2025 alone, the unemployment rate was 5.1%. So I think right now the Chinese government would want to tackle retail sales as well as fixed asset investment. Now, for those who received the weekly report, there is some write-up on how they attempt to change the course of the slowdown in the real estate market to try to boost the purchases and also how to help improve the fixed asset investment. So per capita disposable income stood at 43,377 renminbi in 2025, up 5% year-on-year in nominal terms. Median per capita disposable income nationwide was 36,000, a nominal increase of 4.4% year-on-year. Now, if we look at it, China's whole year inflation for 2025 is hovering around 0.1%. Then a lot of the per capita disposable income gains actually materialize in very strong real growth. Okay, so income growth of rural residents outpaced that of urban residents. Per capita disposable income in rural areas increased 5.8%, while urban per capita disposable income rose 4.3% in nominal terms. And according to Yi Chai Global in its publication on 20 January 2026, as of the end of December 2025, the balance of household deposits in local foreign currencies nationwide reached 167 trillion or 23.96 trillion US dollar, up 9.7% year-on-year. So you can see that even though Chinese economy is growing, but there's also a sense of prudence among the citizens, in a sense that they don't splurge like they did in previous years, most notably in luxury goods and also in those high-end hotels whenever they go for vacation. You know, in fact, most of the tourist spots, they are now having those stay-ins, okay, or what you call homestay vacations and such, okay, you know, to draw the local Chinese into enjoying the kind of local environment and local aesthetics. So they are no longer spending or splurging on luxury goods like previously, and that is why you see that the retail sales is basically more focused on Chinese brands, and it has a very strong growth in the first half, mainly because of the EVs, digital products, and electronics. So right now they are sitting at 167 trillion renminbi. okay, 23 trillion US dollar, whereas if I believe correctly, the US savings is just a small percentage, okay, when compared to the amount of savings in China. But that's a very interesting story, which I will elaborate much later. So in terms of trade data, China's foreign trade expanded 3.8% year on year in renminbi terms. The value of China's international trade in goods and services totaled approximately 45.47 trillion in 2025, or approximately 6.48 trillion. So exports grew 6.1% year on year to 26.99 trillion in 2025, and imports reached a record 18.48 trillion with a year-on-year growth of 0.5%. This resulted in a trade surplus of 8.51 trillion, or the equivalent of 1.19 trillion. This is a new record in trade surplus. So we can see that what happened is that despite the sharp drop in fixed asset investment and gradually declining retail sales, the export or the trade business plus industrial production actually pull everything back up, allowing China to meet its 5% GDP target. So if we look at it, the real estate market, China's housing market continued to soften as home prices in 70 large and medium-sized cities generally fell in December 2025 from the previous month. The first four-tier cities, Beijing, Shanghai, Guangzhou, and Shenzhen, prices of newly built homes edged down 0.3% month on month in December, where prices of second-hand homes slipped 0.9%. So both declines were narrower than those recorded in previous months, suggesting signs of stabilization. So whenever it comes out like this, they always say stabilization, but after some period, it will decline again. Meanwhile, the pressure lingered in lower tier cities. Among 31 second-tier cities, the average month-on-month price decline widened, while prices in 35 third-tier cities also continued their downward trajectory. On a year-on-year basis, home prices in major cities across the country registered larger declines. So the chart on the right depicts how household borrowing has collapsed since the government burst the real estate bubble. So this was in 2020, and in 2021, they burst the real estate bubble, okay, after repeated warnings that houses are for staying, not for speculation. So you can see that household borrowing, which is normally in the form of mortgages, continue to decline and drop severely, okay, in 2025, okay. So, but the other thing happened. Where previously real estate consists a major part of the economy, right now, the major part of the economy consists of trade, businesses, export, import, manufacturing, high-tech manufacturing, AI, high-tech services, and so forth. So due to the slowdown of the global economy, and because of many heavy industries rely on the real estate market, the government may allow the real estate market to reflate in 2026. So they have already done a good job in promoting high-tech manufacturing, the improving trade, improving the export and such. But at such a low level, it gives reason for them to try to inflate the real estate market, because China's industrial production could offer much better growth if, let's say, it involved those heavy industries. For example, steel, cement and concrete, um, household building materials, and moving more to the consumer, like household decorations, furniture, and such. So I think the Chinese government may look at ways to reflate the real estate market so that it gives them a much bigger boost, because global economy is slowing down, and therefore it will inevitably affect the trade and finance, international trade and finance, which is a major part of China's uh, China's revenue in terms of trade and finance. So power electricity consumption. China total electricity consumption reached a milestone in 2025, surpassing 10 trillion kilowatt for the first time. So total power use in China hit 10.4 kilowatt, 10.4 trillion, 10.4 trillion kilowatt hour, representing a year-on-year increase of 5%. So normally, electricity consumption will actually be in line with the GDP. Yeah. So China power generation is going parabolic, as we can see here. It also showed the importance of silver in China's power generation via solar and wind. Now, if we look at it, solar and wind, okay, accounts for a huge percentage. Okay, it also showed the importance of thermal coal and gas continues to play in China's power generation. Coal constitutes 60% of the thermal power generation, which is why for those members in the Telegram channel, I've often say I'm very bullish in certain coal companies in China. So what could happen in February? Major headline news is the investigation of key members of China Central Military Commission, CCMC, which the news broke, I think, on Sunday night. And by Monday, we have a lot of opinionated headlines, okay, in the Western media, okay. For example, there was a gun battle in a hotel when they tried to launch a coup where Xi Jinping was actually staying in that hotel. And then we have the we have the vice chairman who is actually leaking nuclear secrets. So all these are basically fake news, okay? Because the PLA own news channel came out with their own report, as well as news from China also headline what happened actually. Okay, so these are all hit pieces with no clear and verified source of information. So if let's say there's something so huge like a gun battle, okay, or that people are so frantic and fearful that the CCMC, generals are being investigated, or put into uh, being detained. Okay, then the stock market should have collapsed. But there's no tremor in China, as the Shanghai Composite Index dropped only 4 points, or 0.09% on the news, while the Shenzhen Composite Index dropped 123 points, or 0.85%. So the stock market is not buying it. So we can ignore whatever that's being said, okay? Because this is something which the military often follows the so-called the civilian Politburo in terms of what action to take. Okay, they cannot take action by themselves. Okay, they are beholden to the instruction from the Politburo. But since the investigation involved the removal of key members in the CCMC, it could mean a change in the narrative pertaining to geopolitical issues. So don't be surprised of a hardline stance being adopted and with more preparation and exercise involving the armed forces. Now, there are some talks that there need to be a stronger retaliation against Taiwan, okay, but some members in the CCMC caution, okay, so this is the major concern, okay, because what Trump did in Venezuela give grounds that the Chinese government may want to have a more forceful approach towards Taiwan. But whether it is I don't think that's going to be a land invasion, but I think the narrative certainly would become even more hardline. Okay, so that is because the older people within the CCMC may be more may want to have a different objective. Okay, but I think there is a strong movement within China that demands the government to be more intolerable towards Taiwan, especially when more arms from the US keep on moving into Taiwan, and that will only escalate the the magnitude should there be a war. So I think there's a lot of public voicing that they need to have a much stronger hardline approach towards Taiwan, and this could be a concern. So this is just my opinion, okay? Doesn't mean that it will happen in February, but I'm just stating that we could start to see changes that would be more hardline towards geopolitical issues. So other than that, inflation will continue with its positive trajectory. January economy indicators will show some stabilization as trade-in program is extended for another year. Export and industrial production will continue to lead the economy. The Shanghai futures market will gradually gain prominence as a reference point for global commodity prices, especially as more metals are added for trading. Recently, they added, if I'm not wrong, cobalt and nickel into the futures market. So Hong Kong is geared to be a major gold trading hub. So this is a very interesting piece of news coming out from China. Okay. I'll talk about it later. Chinese stock markets, including the Hong Kong stock market, will likely outperform the S&P this year. This is because investors will search for yields as the current deposit rate is very low. So here it says that the total amount of matured deposits of China's banks in 2026 will reach 37.9 trillion renminbi. Okay, that's a huge amount. And so high dividend stock will be a major beneficiary. It is expected that a sizable amount will move into equities. With gold reaching new highs, even a small percentage, say 5% going into accumulated gold accounts, will have a transformative influence on the price of gold. So if we put it into our perspectives, 37.9 trillion renminbi is equivalent to 5.3 trillion US dollar. And here, if he says 5%, 5% of 5 trillion is it's 250 billion, okay? 250 billion going into the gold market is a very huge thing, okay? And this is something to look out for. So let's look at geopolitics. Today, we'll just focus on the geopolitics of oil. Now, our war with Iran will ignite a rush to safe haven assets like gold and silver. It will also result in an oil shock, prompting higher crude and commodity prices across the world, especially if Iran closes the Strait of Hormuz. So this is a chart by North Star northstarbadcharts.com. So here they are saying that due to this descending triangle, there is a likelihood that oil could, once it break above this channel, it will surge higher. Okay, now this is based on technical analysis, but there is some fundamentals that could make this happen. Okay, so there are some analysts which are portraying oil as the next major move based on the current trend. But what are the fundamentals? Here we need to consider several other factors which supports the oil shock theory. The US dollar tanks, which push the price of oil higher. In fact, the US dollar has actually fallen rather sharply the 1-2 days, mainly because of the yen. Okay, what happened is that we all know that the Japanese 10-year yield has surged to record high. Now, because it has surged to record high, instead of strengthening the yen has fallen against other currencies. This is because when the yield is surging at this record high, it means that people have lost confidence in the Japanese financial market. Okay, and that's why they are selling the bonds and unloading the yen. And the Fed is very worried because what happened is that Japan wants to slow down the fall of the yen. And what do? They will sell US treasuries to get the US dollar and use the US dollar to buy yen. And if let's say Japan is the world largest holder of US treasury, if let's say the Japanese government or BOJ continues to divest its US treasury, what happened is that it will cause the US treasury cause the US treasury yield to spike up. And that would be a problem for the US government, which has very high debt. So what the Fed now is trying to do is that they are telling Japan, don't sell the treasury. We will print US dollar and give you the US dollar so that you can use the US dollar to buy yen. So that means, the Fed is like printing money for Japan. So because of this, the value of the US dollar has fallen without really hurting the US Treasury for the time being. Why I say for the time being? Because as the US dollar weakens, the inflation in the US will actually go up again, much higher. And if the inflation goes up much higher, then the Treasury yields would actually increase in tandem. So that's why right now, controlling inflation, the narrative of inflation becomes very important. And that's why the importance of the guesswork, okay, to bring it down. So this is why the US dollar has fallen. Okay, now the other reason why we could see an oil shock is underinvestment in oil exploration. Production has exceeded the number of new deposits being discovered when we look on a time frame of, let's say, 10 years. Okay, so nuclear plants need 5 to 7 years to bring online. The US does not have the luxury of time, so may opt for oil and gas as energy alternatives to kickstart its energy deployment. The other is actually coal. Okay, and that's why I'm also bullish on coal. In fact, I'm bullish more on coal than on oil and gas. Okay, so many deposits in OPEC are overstated. The reserves are based on each member's assessment and are not verified by a third party. Recent shift to alternate green energy by Gulf countries is alluding to this fact that the reserves may be overstated. So a lot of the Gulf states are right now, okay, building up solar, building up nuclear facilities. Now, if let's say they have so much abundance in oil, why should they want to do so? Okay, so this again, like when US announced that they now own the huge reserve of Venezuela oil, there are many analysts who says that actually when questioned where how does when they question OPEC, where how is that reserve being managed? So OPEC was saying that, oh, Venezuela just state that they have so much reserve. And when they ask OPEC, is that verified? They say, no, it's never verified. It's based on members' own country's submission, okay, of how much reserves they have. So that goes to show that a lot of the reserves may be overstated, okay? And that means if, let's say, an oil shock happens, they can ramp up production, but it also goes to show that there will be a limit to how much they can produce as well, because they were also mindful that they want to preserve their reserves, okay? So a war with Iran, which triggered this major move, as Iran will likely strike other Gulf countries, which provide the airspace for the US to launch an attack, and this will include refineries. So these are the things that could happen in the event of a war with Iran. So if we look at oil sector, even though oil price is in a multi-year low, the ETFs are not. So this is a 5-year chart of the two major ETFs. Okay, you can see that, it is in fact on a 5-year record high, and here is just slightly above the peak, okay, in the mid 2024, but it's still high when compared to the earlier part, okay? So that goes to show over the 5-year, it has gained 152%. Here, it has gained 150%. So the ETFs have become expensive. So therefore, it may be prudent to select individual companies instead of the ETFs, where some value could be discovered. In fact, when I check on a few oil companies, okay, they are actually 30 to 40% off from their peak. So that means that if you are interested or in anticipation of a war, okay, you want to hedge your position in oil, it may be more prudent to look at those singular oil companies, okay, because you will have much better upside. Okay, so back to you, Evelyn.
Okay, so let me share my deck again. On for a while, Okay, so share. Okay, yeah, we would like to announce that we will have this 2026 Firehorse Astrology and Global Trends Forecast. This is for the whole year one, where you will learn about the astrology and energy analysis for the year 2026, and also the different interpretations of the forecast tools, that the um, 4 pillars 八字 chart, the hexagram of the year, Qimeng chart, and also flying star feng shui insights, and some astronomy phenomenal in expected in 2026. Okay, so and also BC will present his global trends analysis as well. I think you will talk about some ETF also, right, BC?
I will talk on certain some not a lot on ETFs, but certain trends of certain industrial sector.
Okay, okay, good. So yeah, The events will be on Saturday, February 7th, okay, 8:30 p.m. And the fee is 50 ringgit. It's free for all the astrology and global trend members. The fees will include, if you cannot attend live, then you will have a replay access as well. So the registration form is here. Later on, I will drop the registration forms in the chat, okay, or I will send to y'all in the email or in my Telegram channel, okay. And okay, so this is our 2026 astrology and global trends forecast book. If you have not get one, I would advise you to get a free chapter, as I think 2026 is quite a very volatile year. It's a happening year, and it will be good if you can, see what is coming to help you as well. If you want to get this book for free, actually, and the talk for free, both, you can join our, 2026 astrology and global trends memberships. Okay, so it will be the comprehensive membership will be 249 and the premium will be 356. And if those that join our talk, yeah, pay 50 ringgit, and if you like what we are presenting, then you can choose to join the membership, and then I will discount the 50 ringgit from the membership fees. Okay, yeah, and actually, it's very worth it. It's almost like one whole year. It's until December 2026. Yeah, it's one whole year, and then you can get, early access to the monthly forecast, full recording, and also the welcome gift, the presentation slides, and then exclusive Telegram group for discussion where we will share about the stocks that we analyze. Okay. And also you will get, the 2026 astrology and global trends talk, which is we selling at 50 ringgit, okay, for non-members, and also the book forecast itself, okay, and also some special discount on our courses. And the premium members, they will get slightly more, where they will have a weekly market insights report, and also if you're into Chinese metaphysics, you will get a victory Qimeng direction as well. Okay, and there will be a welcome gift for all members, where we will have a MAC investment strategy, that focus on real meaningful metrics, uncover, companies that are trying to hide, okay, and also differentiate between good and bad analyst ratings. So this is what PC has been doing also. Yeah, okay. So this is what it is. I will encourage that. I think this is just a few hundred ringgit for the information you get. I think our member has got their return like at least 1 to 200%. Okay, I'm not 100 times, but it's percent. Okay, that means that some of the things that we have discussed, for example, gold has gone up almost like 100%, right? I think when we started this platform, gold was like 200 or 200 plus ringgit per gram only, right? PC?
I think one of our in our Met investment strategy, we covered the silver mining companies. That was last year in the month of August or September. At that time, one company, Hecla Mining, was only trading at $9 plus. Today, Hecla is already 30 over dollars. So that is essentially more than 200%.
Yeah, 200% in return. Actually, some of the stocks that we study, since I think 2 years or 3 years ago, it has already gone up by almost like 200 to 300% or so.
And some are actually much higher. Especially for our members who joined us in 2023. 2022, we have those members, then we're already talking about companies like SMIC. At that time, SMIC is below $20. I think now SMIC is 70 plus or 80 over dollars.
Mm,
Hong Kong.
yeah. And also CGN mining.
Yeah, yeah.
Okay. So yeah, so we are actually one of the earliest. I know that there's some other investment guru talk about silver, okay? And I you go and check how much is it to join their programs. It's in thousands of ringgit. Thousands, okay? Yeah, compared to us, like a few hundred ringgits, and you get much, much more better returns in terms of this, okay? So, yeah, no offense. We compare that. There are some very credible, investment guru. You can go and check how much is their rate compared to us. Um, we put it at
Um,
the
they
affordable.
they are credible. We are incredible.
Yeah. That's right. That's right. Now, of course, there are some that there's some that is not so credible lah. You just do your this one lah, okay? So you can follow the big names lah. Like those starts with B and those starts with A and B. I don't want to say the name here. Okay, so you can check how much they are. And I think in this age, you cannot really, unless you are really a very savvy, researcher. So our things, we have already researched properly. These are some of what our member says. This is what we have started when we started. Where gold are, and then this is where silver are also. Okay, yeah, we are advocates of commodities actually. Okay. I think recently only there's one company that I do not know that when they started to talk about silver. Um, we have talked about that few years ago. Even in you can check our book. Just go and check. Okay. Go and buy one copy. It's not that expensive. Unlock your wealth potential. We have talked about silver also, right? Yeah, precious metal. Yeah.
Yeah. We
And we
talk also
publish.
about uranium.
Yeah, we talk about that since 2023. That book was published in 2023. Okay? Yeah. So this is even Bitcoin. We have talked about Bitcoin. Okay. I think our member has already exit since last year because I already told the members to exit Bitcoin. Okay. And I will tell the members when to buy Bitcoins again. Okay. Yeah. Yeah, this is I think SMIC you talk about. Yeah. And also Xiaomi. Xiaomi actually has already up by there's one time they go up to 60 ringgit.
Yeah, but recently it has fallen mainly because of the memory cards.
Yes.
Memory cards actually is incredible. Their price actually jack up year on year. I think it's already few 100%.
Yeah, because of the raw materials and that Samsung has a very good year. In fact,
Yeah, and one of the culprit is who, OpenAI. So OpenAI was anticipating. I read a report actually stating that they were anticipating many build-up of data centers, so they hoard a lot of those memory cards. But the data centers have not even been fully built for some of them.
oh, okay. Okay. Yeah. So is this one even I think some of the tech stock we share here that doesn't mean all these stocks you go and buy. It's not a recommendation. We just share what we have only. So if you're interested, you can look into our weekly report, options for premium member. What we wrote in the weekly report, we even wrote about gold and silver. Okay, and yeah, so yeah, consider joining us. But at least you join the talk and see what the year will unfold for you. It's quite interesting. If from the astrology point this year when I do the research. Okay. Yeah. So this is the summary. Later on, I will put the link for the talk also, the registration form also. So this is the summary from the astrology point. It will be dry and volatile. Okay. Increase of risk related events, but at the same time, there will be also windstorms. Okay. So there will be heated conflict, competitions in defense, war, fires, maybe in industrial or explosive accidents. Yeah. So I hope this will not happen. Because sometimes we forecast and things happen. So we really hope that, we just forecast and it will not happen. I would rather that, I said many, many times, I would rather my forecast is inaccurate. Okay, is inaccurate for these types of forecasts. Okay, yeah. So tax and defense energy sectors will benefits. Okay, and then pressure on agriculture and sustainable policies. Then the financial market will be volatile, high, bullish. Okay, there will be opportunities in metals, defense, and tech. So watch for market corrections from exposed scandals. And focus on transparency and clarity. Okay, so in other words, actually, 2026, I would like to say is that progress comes from principle, actions, truth, and reform. Okay, yeah, over to you, BC.
Yeah, basically, I think the Middle East will be the focal point in geopolitical tension. A war could trigger an oil shock. Trump's 1.5 trillion dollars in defense spending will benefit the defense contractors. Rapid build-out of nuclear plants and the expansion of the US grid will drive the energy sector. The volatility in the yen will force the Fed to help the BOJ by printing US dollar to buy yen. And this weakens the US dollar and drive up the price of commodities. So rush towards safe haven assets like gold and silver. What's happening with ICE will push the demand for higher accountability and transparency, and US is poised for more political turmoil.
Mm.
Yeah,
Okay,
that's all.
so
Yeah.
I think that's all. Any questions? Okay, yeah, progress from principle action. This is what both BC and I are doing. We are just trying to put in the truth. Okay, yeah. So that's it from us. Any questions from anyone? Yes? No?
Marvin have a question.
Oh,
Time to sell
okay.
yen as yen will be depreciate if US back. In fact, I think if the US what is done is that the US will sell dollars to buy yen, so yen could actually become stronger versus the US dollar. Yeah, it's not that the yen will depreciate further. It depends on if you are doing currency trading, it depends on the pairing. So if the Fed intends to help Japan by selling US dollar to buy yen, then yen will appreciate against the US dollar. But on the other hand, if you look at Malaysia ringgit and yen, Malaysia ringgit will still remain strong because Malaysia ringgit is also already stronger than the US dollar. So um, right now, I think Malaysia ringgit will remain to be there because I think due to its strength among a lot of the regional currencies. There's a lot of speculation as well, trying to buy into the Malaysian ringgit, and that reinforce its strength. So, if you want to do currency trading, you can look at the US dollar and yen pair. Yeah.
Mm, okay. So how about other question? Any other questions from anyone? If not, then I think let's call it a night. Thank you everyone for joining us. Okay, I hope I will see you all in the February 7, 2026 Astrology and Global Trends annual talk. Okay, yeah.
Yep. Thank you, Evelyn, for hosting, and thank you all for logging in to our talk show. Hope to see you again on February 7th.
Yeah, Marvin, the talk will be different from the talk we shared. That one is a monthly one. This one is the whole year overview. Okay?
Okay, good night.
Yeah. Okay. Good night. So I think that's it. Okay. Yeah, we call it night. Thanks, PC.